Everyone, welcome to today's US Open live webinar. It is Thursday, July the 6th, 10 minutes before Wall Street opens. As always, I'm your host, Nikos Zabouras, Senior Market Specialist at FXCM. A few things to talk about today. Social media giant Meta Platforms has drawn attention since it rolled out a Twitter rival application. On the central banking front, meanwhile, the accounts of the last Fed policy meeting showed a hawkish undertone, and this maintained market expectations for a hike later in the month, ahead, of course, of tomorrow's NFP's release. While Bank of England Governor Bailey refrained from giving time frame for when rates could begin to lower. Before we get into all of that, however, as always, please read carefully through the risk warnings and the disclaimers, and then we will start. Once again, please read carefully through the risk warnings and the disclaimers, and bear in mind that anything discussed here does not constitute investment advice and should not be construed as such. Okay, let's get the ball rolling. Let's bring Euro USD straight to our screens. So the pair continues to go nowhere essentially amidst lack of catalysts, and the Fed minutes that we referenced did not change that. The Fed had paused in June, but had pointed to further hikes ahead. Some participants indicated that they favored raising rates at that meeting, according to yesterday's accounts. But again, we didn't get much more than what we essentially already knew. And in any case, expectations for a hike, market expectations for a hike later this month were maintained. The technical outlook has not changed. The pair is down on the week and set lower lows earlier today. This creates risk for deeper pullback towards 1.7020, but 1.0634 continues to look distant. After the low, however, earlier today, the common currency managed to bounce back into profitable territory and continues to defend the 200-period EMA, the black line on the chart. This gives it the ability, or it maintains the ability to challenge 1.10 once again, but does not inspire much confidence for an advance towards and beyond 1.1096. Of course, we expect significant releases tomorrow, and this need to be taken into account since it could determine the next leg of the pair. Now let's move to GBP USD, which is supported this week and got a fresh boost in the morning from Governor Bailey's BBC interview, BOE Governor Bailey, where he did refuse to provide any insights as to when interest rates could begin to come down. The central bank was forced to reaccelerate the pace of hiking after hot inflation and employment reports. So Fed tightening and prospects of Fed tightening prospects, continue to support the greenback. So there are some competing factors here as well. at this stage, immediate bias is on the upside, and the British pound still has 1.2948 in its eyesight, but a strong catalyst would be needed for taking out these levels. On the other hand, again, we said that the US dollar is also supported by prospects for Fed tightening, and this creates risk for a test of 1.26, 1.259, where there is a strong confluence of support, but some sort of catalyst would be needed for a break of those levels, which would bring 1.2273 back in the spotlight. We're still 4 minutes before the US Open, but let's go ahead and check the Nasdaq. It was a holiday shortened week, but already has a full day of trading. Yesterday, after a stellar first half of the year with gains of nearly 40%, the current month has started in a subdued mood. Again, there is scope for further tightening and a higher for longer approach by the US Central Bank. Other factors, of course, are in place, such as the continuing tensions between US and China, something that we talked about on Tuesday. Given these factors, a pullback towards 14,700, 14,650 would not be unreasonable. Daily closes below the EMA could pose the upside momentum, but that doesn't look very likely at this stage. Bulls remain clearly in control, but fresh impetus would be required for extending their advance and challenging the 16K mark. Now, before we talk about what's ahead, let's talk about something that we said at the beginning of today's session about Meta platform, which rolled out a Twitter-like application today in over 100 countries, although European Union countries do not seem to be included. So it's a text sharing application called Threads. Members can posts from members can be up to 500 characters and can include links, photos, and videos. This will be linked to Instagram, so it gives Instagram users an ability to log in with that account, and that's definitely something that can help in the expansion of Threads. And of course, this way, Meta platforms challenges Twitter and continues to fuel this, let's say, feud between Elon Musk, owner of Twitter and CEO of Tesla, and the CEO of Meta Platforms, formerly known as Facebook, Mark Zuckerberg. You can find more information around this topic on your respective, on the FXCM market analysis website of your respective regions. Now, what's ahead? We have US employment report on Friday. The labor market is very strong, according to Sir Powell, and this drives the Fed's aggressive monetary stance. Despite an increase in unemployment and the downtick in wages, the economy added the most jobs since January in the last report. And this definitely makes hard for the Fed to step back. Now, as the next week begins on China, we expect CPI and PPI data on Monday. Inflation was almost non-existent in June, a clear sign of weak demand, while producer deflation had deepened. The central bank, of course, is trying to provide liquidity and support the economy through a series of cuts in various rates. And then on Tuesday, before our next session, UK labor data, unemployment had ticked down in the last report, and wages increased further. Governor Bailey had recently said that current level of wages are unsustainable, along, of course, with hot inflation. The bank was forced to reaccelerate the pace of tightening, as we already talked about. That's pretty much it from me for today. We will talk again next week on Tuesday at our usual time slot.